right, so let's do a breakdown of how we're going to look at the market this morning. So right now I got ES brought up, S&P 500. So what we're looking at is the first we still have this, we're on the daily chart, so we still have this gap that's yet to been filled, right? So that's an area of interest that we're looking for. So that's the first thing I'm looking at, and this is on the daily time frame. You always want to start on the higher time frames to tell you a bigger story, right? So let's mark out this area right here. Hasn't been filled yet. Doesn't mean it's going to be filled, but market likes to fill gaps, right? We've talked about that before. So we have the gap right here. That's the daily gap. Now we have an imbalance. So let's look at the market. So we were kind of floating around, right? So we came up, had a low, a low. We broke this high, created a high. So it was new high, higher low, higher high, higher low, higher high, right? But then over the course, and this was breaking like all-time highs, so it's natural that it's going to pull back some. So what we're looking for is where exactly is this going to pull back to? So this is how we're doing our analysis. The technical analysis is, okay, so we had the structure, market structure. So boom, higher lows, higher highs, higher lows, higher highs. Okay, but then we had this break right here. It broke these lows. So with it breaking those lows, came up, made a lower high, and now a lower low. And this is on the daily time frame. So I know our idea is, okay, since it broke this level right here, it's probably going to want to continue going down, but where's it going to go to? We have a gap, and we also have the previous support, which is right here. So we got these lines drawn out. The next thing I'm looking at is the daily fair value gap, which is right there, which is pretty close to where price is right now. It's not too far off of that. Where are we looking at? Actually, if I have to bring this down, it's close enough. So, I mean, we're here at the 28s. A touch into that fair value gap is 34. So, we're like 6-7 points off, something like that. MACD is strongly bearish on the daily chart. So these are the areas that I'm looking at for the daily chart. I'm really looking for, when market opens, to have that quick spike up to sweep liquidity, jump into this fair value gap, and then I'm waiting for it to go back down. Now, obviously, you're not going to be married to a bias. So if it continues to hold up, so say it comes back up and it just keeps pushing, doesn't turn around, because it's possible that this candle today, this is a daily candle, it just goes green all day into here. Maybe starts having a pullback later, so we'll see what happens. And we're going to drop down to a 4-hour. So what's in the 4-hour? Okay, so there's a gap up here in the 4-hour chart. Now, it doesn't quite fit into our fair value gap, but if that area, so let's look at that. It's very, very small. So let's change the color of that to purple. Okay, so that overall aligns with the bias. So, okay, so then it starts getting a little bit tighter, right? So if it goes into there, we can say, okay, so this is our daily fair value gap, but if it comes up and ticks to the very top of our daily fair value gap, comes in here, it's another idea. Okay, now let's see how it reacts to this area. Because again, when you come down to this market structure, you have lower lows, lower low, lower high, lower lows. But now we're starting to get these equal lows. But what's going to be at equal lows is going to be stop orders that the market makers are going to hunt. So that's again another target area for which is going to our target down here, target area for them to attack. But what they're going to try to do is get you to get a bunch of people to try to go long by pushing it up maybe to here or around here. They might even sweep liquidity up here. But again, I'm not looking to go long as of yet. So for this, I would need to see price break above this level, come down, come back down, and hold here, and then start going back up. But until then, I'm short biased. Let's go to the 1 hour chart. 1 hour chart. So comes up, see some resistance up here, breaks a low here. So lower low, lower high, lower low, lower high, lower low. Kind of a break back up, but you'd really want to see it break above here and hold above here, which it failed to do. Comes here, so we're developing like a strong level of resistance right here. So now you have a bunch of relatively equal highs here, at least two for sure. 1, 2 touches. This one could create a third. So again, those are levels of liquidity. There's liquidity there. So that's what's again leading me to believe it's going to spike up into here and then do a big drop. And then first target would be these relative equal lows. Second target would be this gap in the daily chart, which is still very obvious here in the hourly chart. Following the 15-minute chart. Okay, so what's our 15-minute charts here? But see, like now all the charts are starting to talk to each other. As we get tighter and tighter in time, we're still seeing the same thing. It's just in a very, very tight, it starts getting messier, which makes it harder to read, which is why I always tell you guys to use your bigger time frames. And I know when we talk about it in the group, it's 15-minute, 5-minute, 3-minute, or 15-minute, 5-minute, 1 minute, or 15-minute, 3-minute, 1 minute, whatever you like. But you need to be using that bigger time frame. And then in the morning, you need to be using this daily 4 hour, 1 hour. And you'll get your idea by reading the chart the same way that we've been reading the chart. Market structure. We lean on market structure first. That's our strength. That's what's going to help us. And a lot of the times it gets tempting to go against market structure. You be people that's like, oh, this is a triple bottom. It's like, is that a triple bottom? I mean, there's 1, 2, 3 touches here, right? Okay, yeah, that's a triple bottom. It's going to go back up, which it is in the shorter term. But it's also a triple. It's forming a triple top. So what is it really? It's a range. We're stuck in this range right now. So what we're waiting to do is for it to sweep liquidity up into our gap, break the range, trick a bunch of people to go long because it's breaking out. It's not breaking out. Not yet. And dump. Go to the 3-minute. Same thing. There's that gap. Even on the 3-minute chart, there's a gap right here. Same way we marked out a gap on the 4-hour chart. The gap's just from the 23rd. Gaps love to get filled. Let's look at this gap. Let's see if it matches up. It's way back here. Oh, look at that. There it is. The gap exists. All these charts talk together. And look right here. So there's a gap here. It wanted to get filled. Almost perfectly it got filled. These gaps love to get filled. They might not do it right away, but they're going to do it. So there's a gap here. If this starts going up, so let's say it starts going up here, comes back down and bounces back and starts going back up, then maybe with a tight stop, take a long and stop it in this gap. And then when it gets to this gap and fills it, then you start looking for that reversal. But it's all about risk management. So that's what I'm looking at today for the S&P 500. And maybe end of the day, we'll see how these levels worked out, see if it worked out. But Don't forget to, you mark out at 8:30. I'll mark out overnight highs, overnight lows, which is probably going to be somewhere. It's probably going to be, if we're looking at what's today, the today's the 31st, right? So probably going to be looking at there and there, little range. But you can always take that reversal play. See how it goes. All right, so we are back. Today is the 2nd of August, right? Is this August? Yeah, so in the previous recording, I marked out these levels. I did a technical analysis for the chart that I was looking at on the 1st or the 31st. It was the 31st. Yeah, it was the 31st, and I was waiting for some of these levels that we had marked out. So basically what I'm here to do now is to discuss the levels that we drew out and what we expected, what we were talking about, and to see how it worked out. So I kind of backtracked to where we were, and the idea was we were talking about on this day looking to see this daily fair value gap get filled, or this gap, the 4-hour gap, to get filled that day if it was going to come up, hold above this level into the daily fair value gap, and maybe push up into this 4-hour imbalance gap to reverse and push to the downside. So I have all the levels marked out, and then this was another daily gap in price. So we were just looking to see what happens. So this was the 31st, so we're just going to play it forward just a little bit. And the idea exactly of what we talked about. So the 31st is when we were talking about it. Price was about here in the morning. Actually, it was like it was probably more somewhere like right here. So as time moved on, market opened up, held the level that we were talking about, and we said, okay, if it holds this level, we'll probably look for it to go up into this gap. So it came up, broke this level, created a fair value gap here, and this is a 15-minute chart, so looks a little bit different, but here's this little 15-minute fair value gap. Price comes down, bounces into that 15-minute fair value gap, and then goes right into that level that we were talking about, that 4-hour gap. And it kind of hits there, kind of plays around for a second, does one more jump up, and then breaks. And what we did was we were waiting for this break. And that was yesterday. This happened yesterday morning, right around market open, so 9:45. Comes up, dips, which right there gave us our idea to go in. And you can see we did take a trade where I don't know what the balance was on this 50K combine when we were recording. I want to say it was like 50,300 or something. You can't take too big of positions on these 50K accounts. You can, but you run the risk of over leveraging yourself. Remember, it's risk management. So it's not worth, Rome wasn't built today. You don't have to pass these combines in 2 days or 3 days. But we got that breakdown right out of that 4-hour gap that we were talking about, and it just runs. I believe we said this was our first target. But I had not drawn out the balance, which I had it on here, but obviously this is 2 days later, so that's gone. So either way, came up into the level we were talking about and did the flush that we were looking for. And we're about to fill this gap, which was that break in the, was that a daily or a 4-hour? Oh yeah, that's a daily gap right there. So right now we're roughly 20 points off. More than likely, we're going to fill this gap today. At least that's my thesis of the day, is this is where it wants to go. But followed our followed our plan. It's going down, so this is my next target, and then at this point I would expect to see some price action like this, sideways consolidation. It very well could keep going through. It might fill that gap and start bouncing back up. But my idea for the day is short biased. It's gonna I think it's gonna continue down. I mean, you can see since Asian session, it's been going down. Big red candle yesterday. So the first was FOMC, which this is when we were looking at it, and it gave us that push up into these areas that we were talking about. Then it starts flushing down. So I'm looking to see this today. But that would conclude this video on just daily technical analysis, what I do in the mornings, how to run through your charts to make all the charts make sense to help you get that bias. But you need to have a plan. It's a if this, then that. So like we said, if it comes up and holds this, then it's going to go to here. And then once it goes to here, if it breaks down and comes down, it's going to go to here. So we had the plan. And we had an idea for both directions, because you don't want to get married to the bias of, oh, it's going to only go up or it's going to only go down. No one ever knows. We all can just make guesses. And using technicals is the best way to make a guess. So that's the end of this video. If you have any questions, reach out to me. I'd be happy to help. Have a good one.